In this video, I will be explaining how to avoid potential fake outs. I'm not saying that you can avoid them forever, but you can give yourself a better chance at avoiding them. And what a fake out is we gotta jump down to the higher time. We gotta jump to the higher time frames. So let's say the 4 hour is bullish, and we always get our bias based off the previous 4 hour. So let's say our 4 hour looks something like this. We close strong bullish, and the new 4 hour, the one that we're trading right now, maybe created its top wick. So maybe it created its top wick, but it's driving down because what we trade, the 30, the 15, the 1 hour, these wicks and these top wicks and bottom wicks just represent, onion plays, represent ranges, represent breakouts. Like all that is on the 4 hours, just a wick. But on the entries we take, that's, that is our playbook setups. Like for example, 4 hours bullish, so we're bullish, we're ranging, right? So this is right here to the left. This is the 4 hour that pushed up. This 4 hour, this is what it would look like on the 1 hour, or the 30, or the 15. Let's say the 15, or the 30. And what that looks like is you had your big drive up. You create that bottom wick. You had your big drive up, and then this is price just retracing. This is that retracement from the top to where it is now. This is just price hovering, waiting for that new 4 hour to open. And when that new 4 hour opens, because this one closed bullish right here to the left, if we were to get a closure below on the 15 or the 30, so say price, closes below. So say price closes below. This next candle closes below. I will not be taking this trade because all that could be, I'm bullish on the 4 hour. The 4 hour is guiding me. All that could be on the 4 hour is the 4 hour grabbing its bottom wick to continue moving bullish because we are bullish. All that could be is something like this on the higher time frame, grabbing the bottom wick. All right, ready for takeoff because we are bullish. That's what it would look like on the higher time frame. So instead, how can you avoid from getting faked out or giving yourself a better chance at not getting faked out? Well, a lot of times when you go against the trend, you're going to get a fake out. And what I mean by that is because the 4 hour is bullish, this next candle is probably going to activate the sellers right here, and then it's going to drive upward, meaning it's going to close back above the range like this. And that's just, price creating that bottom wick on the 4 hour to continue moving bullish. And it's going to look something like that. So how can we avoid from getting faked out when we take a trade on the break of these lows because we are breaking out? Well, there's a few indications, there's a few nuances. And what I mean by that is the nuances are, one, what do we see? Well, we're already overextended, as you can see. We are overextended. I would never take a sell right here when there's been no structure. We're selling from the top of this range. Like that's where you want to catch your sell, but this isn't clean. So one, I would never take a trade if we broke out. I would need structure. I would need some kind of indication telling me, hey, we're going to potentially stay down in below this range to go retest and to go fill the wicks that were created. So one, I would never be taking a trade like that. Two, we are bullish. So how can I get in on sells if we are bullish? Well, it's what we call a range 1 and a range 2. Right here, this is range 1. This is range 1, and if we got a closure above and say the next candle closes below, this would be considered range 2. Meaning, say we broke the highs, anticipating all the aggro buyers, all the impatient buyers broke the highs, and we ended up closing below this new support that was planted. Right here is where we call range 2 because this is, like I said, this right here is range 1. Whoops, let me change the color. This is range 1 and then this would be range 2. And so what you could do is mark off this area right here, mark off this area as a new range, and a closure below that would indicate this is a range 2. And in order to help yourself avoid fake outs, because you just saw one right here, this is a fake out, price closed back below, you need to wait for a range 2 sell, or if the 4 hour is bearish, a range 2 buy. And now that is a playbook setup for me, and a playbook setup that I feel comfortable taking, because if I lose, I have the data that backs that range 2 sells, and range 2 buys have made me profitable. So what I would wait for is I would probably get in on the break of these lows, because that would be breaking the higher time frame lows, is wait for the top wick, wait for this top wick, and I would have my entry on the break of these lows. So it looks something like this, probably back in this range here because I could afford it, and wait for the top wick, and I would have it on the break of the lows, and I would feel comfortable taking the sells even though the 4 hours bullish, to go tap into like a wick fill or a range or anything that indicates where price may want to react and reject off of. So that is how you avoid fake outs. So let's use the example of price being the 4 hour being bearish. The same thing applies. I will make a video on target tapped where you can get aggressive on taking buys, but for right now I'm just going to keep it simple, short and sweet, and just not make it as advanced for anyone that does watch this and they're still learning. These would be the pretty easy setups and playbook setups that I would recommend. I will make a video on target tapped and liquidity and things like that, so you can get better entries and things like that, but that requires more time, more chart time, and so I will make a video later on. So let's say this 4 hours bearish. So say we're coming down from here. Let's just say we're coming down from here. We're coming down from here, and then price pushes down, and it creates structure. Let me move this over so it's just easier. So say we're pushing down. Whoops. What the heck? So say we're coming down and the 4 hours bearish. So this is, we're coming down 4 hours bearish. We're in this range. Sells here, I would take, but not from, I would need structure. So let me just do something real quick before we go back into the fake out. I would take his sells because this is a breakout. But what I would need is a bullish candle, because I need a new stop loss. So I need a bullish candle to close. And now if we break out bearish to the downside because the 4 hours bearish, I would take sells, because that candle that closed bullish gives me a stop loss. Also gives me, so now if we close below, now I'm interested in sells, wait for the top wick, entry on the break of the lows, or if this wick's big, if this wick is, big enough, I will get entry on current candle low to go fill the rest of the wick and then break even at that point. But that's how I take sells. But that's besides the fact, this is avoiding fake out. So say the candle, 4 hour candle closes bearish and I want to get in on buys. Same thing applies. Let me just draw some candles real quick so we can go over this. Same thing applies. Let me get a bearish candle closure, boom, and then a closure back above here to indicate a breakout, but could be a fake out. So say the 4 hour looks something like this. Let me fix this real quick. This is really bothering me. Okay. Say we broke back into this range, whatever. We are ranging 4 hours bearish. This is a move down that we had, and this is what the 4 hour now looks like. 4 hour looks something like this. Previous 4 hours, so we're bearish. That new 4 hour, what this breakout candle is representing is what this candle is representing on the 4 hour is just potential top wick being created. Something like this right here, this top wick being created before price decides to continue with the bearish trend of the higher time frame confluence. So what that would look like is, like I said, the fake out could just be right here, could just be that top wick on the 4 hour to continue moving down. In order for me to get in, same thing applies. If you're bearish, you're bullish, range 2, because the 4 hour close bearish, I will be taking a breakout above. I need range 2 breakouts. And what I mean by that is I need the candle to either stay above, celery potentially, depending on high times volume. I need the candle to stay above. And now if I get a closure, this could either be a fake out, by the way, like it doesn't matter. Like say you close back in the range and then the next candle closes above this range. Like I said, you have range 1, you have range 2, doesn't matter. Say this candle now closes above with clean traffic to the left. Now you have a new resistance that indicates a range 2 resistance, meaning that you have your, you have your range 1, which is right here. Range 1 is right here, range 1, and this right here is your range 2. And now if you get a closure above, I will feel comfortable taking a trade going against the higher time frame direction, meaning the 4 hours bearish. I will feel okay going against that, because what's going to happen is most likely this candle right here represents the 4 hour high. This is that 4 hour high, and what that's going to look like on the lower time frame, you have your range 2. What that's going to look like is wait for the bottom wick. Wait for the bottom wick. Bottom wick's been created. Get in on the break of the highs, go target the top of this range, and that's what it's going to look like. And entry, like I said, above the previous high, which is usually like a 4 hour. It's best if it's like a 4 hour high, it's a higher time frame high. Price has a better chance of moving in that direction, but it doesn't matter because I have a range 2 and I have to follow my playbook. I can't just say I don't want to be in it. Like if it shows up, I have to execute. Execution is my edge. Execution is what makes you profitable. So be so systematic towards the playbook and not worry about the profits, not worry about the outcome, because as long as you can just be systematic and worry about your progress and the system, the money's going to flow to you so effortlessly and easily that you're going to have no idea that it's even flowing to you. So what that's going to look like on the 4 hour is, this is that big move. What that's going to look like is this 4 hour, like I said, coming back up to create its top wick or create a steeper top wick. So looks like, you had a bottom wick. Now it's coming back up to create its steeper bottom or top wick. It's coming back up here, steeper bottom or top wick before it decides to reject. And, a lot of times, we're in and out because you're going against the trend. A lot of times you'll see price tap an area, and then next thing you know, that's our exit, which is like break even, partials, or close full. You'll see price do this exactly. It'll start to reject bearish, and the next thing you know, you're bleeding because you're going, the 4 hours ready to start filling this wick or higher time frames and just continuing to melt because we are trending bearish. So that is how to avoid fake outs. Range 2. Always wait for range 2. If you're uncertain, wait for range 2. Hope you guys enjoyed.